Question 1. Which of the following is not a characteristic of a health maintenance organization? HMO health insurance plan. A. Requires members to choose a primary care physician PCP. B. Offers a network of healthcare providers who provide services at discounted rates. C. Allows members to see specialists without a referral. D. Requires members to seek care within the HMO's network except in emergencies. Answer C. Explanation. HMO plans typically require members to choose a primary care physician PCP and obtain referrals before seeing specialists. The goal of an HMO is to manage care within a network where members are usually restricted to in-network providers except in cases of emergency. Option C is incorrect because HMO plans do not generally allow members to see specialists without a referral. Question 2. Mr. Davis has been on a health savings account HSA, eligible high deductible health pay (CHPO) for 2 years. He is now considering contributing to his HSA, which is currently set up through his employer. He's 35 years old and wants to know the maximum contribution he can make to his HSA for the year. What is the correct answer? A. $3,500. B. $4,850. C. $7,000. D. $7,750. Answer B. Explanation. For individuals under 55, the contribution limit to an HSA for 2025 is $3,850. However, since Mr. Davis is 35 years old, he can contribute up to this limit. Option B is correct because it reflects the appropriate contribution for a single individual under 55. The additional catch-up contribution limit applies to individuals aged 55 and older. Question 3. A client is applying for health insurance and discloses that they have had a chronic health condition for several years. The insurer wants to review this condition in the underwriting process. What is the most appropriate action the insurer should take according to the Arkansas regulations on health insurance underwriting? A. Deny the application outright based on the pre-existing condition. B. Offer coverage with exclusions for the pre-existing condition. C. Request additional information about the condition and the client's treatment history. D. Approve the application without any review of the pre-existing condition. Answer C. Explanation. In Arkansas, health insurers are allowed to review an applicant's health history during the underwriting process. Insurers can request more information to assess the impact of pre-existing conditions but cannot automatically deny coverage for such conditions. Under Arkansas regulations, insurers typically offer coverage with certain exclusions or higher premiums depending on the findings. Option C is correct because it aligns with underwriting procedures ensuring fair treatment and compliance with consumer protection laws. Question 4. Which of the following best describes the role of the Arkansas Insurance Commissioner's Office in the regulation of health insurance? A. The Arkansas Insurance Commissioner's Office approves health insurance policy premiums and ensures they are set at fair rate. B. The Arkansas Insurance Commissioner's Office sets healthcare provider reimbursement rates for Medicaid and Medicare. C. The Arkansas Insurance Commissioner's Office directly handles health insurance claims and adjudication. D. The Arkansas Insurance Commissioner's Office manages the claims process for individual health insurance plans. Answer A. Explanation. The Arkansas Insurance Commissioner's Office is responsible for overseeing the regulation of health insurance policies, including the approval of health insurance premium rates. The Commissioner ensures that the rates charged to policyholders are fair and comply with state regulations. The office does not directly handle claims processing or set reimbursement rates for Medicaid or Medicare. Therefore, option is correct. Question 5. Mr. Smith is purchasing a group health insurance plan through his employer. His employer offers a preferred provider organization PPO plan. What is the main advantage of a POPN compared to a health maintenance organization HMO plan? A. EPO plans require no referrals to see specialists. B. PPO plans only cover in-network services. C. PPO plans provide lower premiums than HMO plans. D. EPO plans mandate the use of a primary care physician PE. Answer an explanation. PPO plans allow members to see specialists without needing a referral from a primary care physician PCP, which is a key difference from HMO plans. PPO plans also provide coverage for out-of-network services that are a higher cost, while HMO plans restrict members to in-network providers. Option is the correct answer as it reflects the primary advantage of PPO plans. Question 6. Mrs. Johnson, who is 60 years old, is enrolling in a Medicare supplement Medigap policy. Which of the following statements about Medigap policies is true? A. Medigap policies cover long-term care and dental services. B. Medigap policies fill gaps in coverage provided by Medicare Parts. And B. C. Medigap policies provide prescription drug coverage under Part D. D. Medigap policies are available to anyone enrolled in Medicare Part C. Answer B. Explanation. Medigap policies are designed to fill the coverage gaps left by Medicare Parts B, such as coinsurance, copayments, and deductibles. They do not cover long-term care, dental services, or prescription drugs. Those are covered under other plans like Medicare Part D. Additionally, Medigap policies are not available to those enrolled in Medicare Part C, Medicare Advantage plans. Therefore, option B is the correct answer. Question 7. Which of the following is not a key component of an insurance contract under Arkansas law? A. Offer and acceptance. B. Legal capacity of the parties. C. Full disclosure of the underwriter's salary. D. Legal purpose. Answer C. Explanation. An insurance contract under Arkansas law requires certain key components including offer and acceptance, legal capacity of the parties, and legal purpose. However, full disclosure of the underwriter's salary is not a requirement for an insurance contract. The contract's enforceability is based on its essential elements, and the underwriter's salary does not impact the contract's validity. Therefore, option C is not a key component of an insurance contract. Question 8. The Arkansas health insurance marketplace offers both public and private health plans. What is a key difference between these two types of plans? A. Private plans are subsidized by the federal government while public plans are not. B. Public plans are only available to low-income individuals while private plans are available to all income levels. C. Private plans are available through the health insurance marketplace but are not subject to federal regulations. D. Public plans offer more flexibility in plan design than private plans. Answer B. Explanation. Public health plans, such as Medicaid or plans offered through the Arkansas health insurance marketplace, are designed for low-income individuals and families. Private plans, while also available through the marketplace, are generally available to individuals at all income levels. Public plans are specifically intended to provide coverage for lower-income individuals who qualify based on income and other eligibility criteria. Option B is the correct answer because it reflects the distinction between the two types of plans. Question 9. Mrs. Adams has a disability income insurance policy. She becomes partially disabled after an accident. According to her policy, which of the following statements is correct regarding partial disability benefits? A. Partial disability benefits are typically paid in full for the duration of the benefit period. B. Partial disability benefits are based on a percentage of the insured's income and typically paid for shorter period. C. Partial disability benefits are not available under most disability income policies. D. Partial disability benefits are automatically converted to full disability benefits after 6 months. Answer B. Explanation. Partial disability benefits are typically paid based on a percentage of the insured's income and are usually offered for shorter period than full disability benefits. These benefits are intended to replace part of the insured's lost income due to partial disability, and they generally don't extend for the entire benefit period. Therefore, option B is correct. Question 10. A client applies for an individual health insurance policy but discloses a pre-existing condition under Arkansas law. How should the insurer handle this disclosure during the underwriting process? The insurer can deny coverage for the pre-existing condition but must offer coverage for all other conditions. B. The insurer must offer coverage immediately without any exclusions or limitations. C. The insurer may deny the entire application based on the pre-existing condition. D. The insurer may impose a waiting period for coverage of the pre-existing condition. Answer D. Explanation. Under Arkansas law, health insurers can impose a waiting period for coverage related to a pre-existing condition but cannot deny coverage for the entire policy based solely on the presence of a pre-existing condition. The waiting period allows the insurer to assess the risk posed by the condition and limit its exposure for a certain period. Therefore, option D is correct. Question 11. In Arkansas, which of the following statements is true regarding the cancellation of a health insurance policy by the insurer? A. An insurer can cancel a policy without notice at any time for non-payment of premiums. B. An insurer can cancel a policy only after providing a 30-day notice to the insured. C. An insurer can cancel a policy only if the insured has filed multiple claims in the past year. D. An insurer cannot cancel a policy once it has been in force for more than 12 months. Answer B. Explanation. In Arkansas, if an insurer cancels a health insurance policy, they must provide at least a 30-day notice to the insured, regardless of the reason for cancellation. This provides the insured with adequate time to make alternate arrangements for coverage. Option B is the correct statement. Question 12. Mr. Lee has a health insurance policy with a $500 deductible and a $2,000 policy limit. After an accident, his medical bills amount to $2,500. How much will Mr. Lee pay out of pocket for the treatment? A. $500. B. $2,000. C. $2,500. D. $1,500. Answer D. Explanation. In this case, Mr. Lee's deductible is $500, so he must pay that amount first. After the deductible is met, the insurer will cover the rest of the bills up to the policy limit. However, since the policy limit is $2,000, the insurer will pay $1,500 of the total bill, leaving Mr. Lee responsible for the remaining $1,000. Therefore, Mr. Lee will pay $1,500 out of pocket. Question 13. Which of the following is considered a pre-existing condition under Arkansas health insurance laws? A. A condition that has been diagnosed or treated before the policy's effective date. B. Condition that develops after the policy's effective date. C. Condition that has been covered by Medicaid in the past. D. Condition that does not require treatment or medication. Answer A. Explanation. A pre-existing condition is a condition that was diagnosed, treated, or for which symptoms existed before the effective date of the policy. Insurers may impose waiting periods or exclusions for pre-existing conditions under certain circumstances. Option A correctly defines a pre-existing condition. Question 14. In Arkansas, what is the maximum age limit for an individual to qualify for a health savings account HSA? Eligible plan A. 50. B. 65. C. 70. D. There is no age limit. Answer D. Explanation. In Arkansas, there is no age limit for eligibility for an HSA eligible plan. However, once an individual reaches 65, they are no longer able to contribute to the HSA, but they can still use existing funds for qualifying medical expenses. Therefore, option D is correct. Question 15. Which of the following types of health insurance policies typically includes a provision for the coverage of rehabilitation services? A. Disability income insurance. B. Long-term care insurance. C. Major medical insurance. D. Accident insurance. Answer C. Explanation. Major medical insurance policies often provide coverage for rehabilitation services as part of the overall medical care benefits. This can include physical therapy, occupational therapy, and other rehabilitation services. Disability income insurance, long-term care insurance, and accident insurance typically do not offer coverage for rehabilitation services in the same manner as major medical insurance. Question 16. Under Arkansas law, when must an insurer provide notice of a claim denial for a health insurance policy? A. Within 30 days after the claim is submitted. B. Within 15 days after the claim is submitted. C. Within 45 days after the claim is submitted. D. Within 60 days after the claim is submitted. Answer A. Explanation. Under Arkansas law, insurers are required to notify the insured of any claim denial within 30 days after the claim is submitted. This helps to ensure that the insured has an opportunity to appeal or address any issues related to the denial. Therefore, option A is correct. Question 17. A policyholder in Arkansas has a health insurance plan with a copayment of $20 for doctor visits. If the policyholder visits a specialist and the total bill is $150, how much will the policyholder be responsible for paying? A. $150. B. $20. C. $130. D. $170. Answer B. Explanation. In this scenario, the copayment is a fixed amount regardless of the total cost of the service. Since the copayment for doctor visits is $20, the policyholder will be responsible for paying that amount, not the full $150. Therefore, option B is correct. Question 18. Mr. Johnson is seeking to file an appeal for a denied health insurance claim in Arkansas. Which of the following steps should he take first? A. Contact the insurance company's customer service for clarification. B. hire a lawyer to file an appeal on his behalf. C. Immediately file formal complaint with the Arkansas Insurance Department. D. Submit second claim to the insurer for the same service. Answer A. Explanation. The first step in filing an appeal for a denied claim should be to contact the insurance company's customer service department for clarification and to understand the reasons for the denial. This will provide Mr. Johnson with the necessary information to properly file an appeal. If needed, he can escalate the process through formal complaints or legal action, but initial communication with the insurer is the first step. Therefore, option is correct. Question 19. Which of the following is true regarding individual health insurance policies in Arkansas? A. Insurers are not allowed to deny coverage for pre-existing conditions. B. Health insurance premiums are the same for all policyholders regardless of age or health status. C. Insurers are allowed to impose waiting periods for pre-existing conditions under certain circumstances. D. Health insurance policies are automatically renewable each year without review. Answer C. Explanation. In Arkansas, insurers are allowed to impose waiting periods for pre-existing conditions, which means they can limit coverage for those conditions for a specified period after the policy's effective date. However, insurers cannot deny coverage outright for pre-existing conditions. Therefore, option C is correct. Question 20. What is the primary purpose of a stop-loss provision in a health insurance policy? A. To limit the insurer's overall liability for claims. B. To prevent the policyholder from incurring out-of-pocket expenses above certain threshold. C. To provide coverage for out-of-network services. D. To limit the number of claims that can be made during the policy term. Answer B. Explanation. A stop-loss provision is designed to protect the policyholder by limiting the amount of out-of-pocket expenses they must pay for covered services during a policy period. Once the policyholder's costs exceed certain threshold, the insurer will cover all additional expenses. Therefore, option B is correct. Question 21. In Arkansas, which of the following is true about the coverage of maternity benefits under individual health insurance policies? A. Maternity benefits are automatically excluded from all individual health insurance plans. B. Maternity benefits are only covered if the insured had prior health insurance. C. Maternity benefits are generally included in individual health insurance policies. D. Maternity benefits are only covered if the insured is married. Answer C. Explanation. Under Arkansas law, maternity benefits are generally included in individual health insurance policies unless specifically excluded by the terms of the policy. The state mandates that insurers provide coverage for maternity services, though there may be specific conditions and limitations. Therefore, option C is correct. Question 22. If an Arkansas health insurance policy has a waiting period for pre-existing conditions, what is the maximum waiting period allowed for an individual to be covered for such conditions? A. 6 months. B. 12 months. C. 18 months. D. 24 months. Answer B. Explanation. In Arkansas, the maximum waiting period for pre-existing conditions is generally 12 months. This means that an insurer can impose a waiting period of up to 12 months for coverage related to pre-existing conditions, although after this period, coverage for those conditions must be provided. Therefore, option B is correct. Question 23. An individual with a health insurance policy in Arkansas is required to pay a $200 deductible and 20% coinsurance for a hospital stay that costs $5,000. How much will the insured pay for the hospital stay? A. $200. B. $1,200. C. $1,000. D. $1,400. Answer B. Explanation. The insured is responsible for the $200 deductible, and after the deductible, they will pay 20% of the remaining cost of the hospital stay. The total bill is $5,000, so after the deductible, $4,800 remains. The insured's 20% coinsurance on $4,800 is $960. Adding the deductible of $200, the total out-of-pocket cost for the insured is $1,200. Therefore, option B is correct. Question 24. What is the primary function of the Arkansas health insurance marketplace? A. To provide discounts on health insurance premiums for all Arkansas residents. B. To offer a place for individuals to purchase health insurance and determine eligibility for government subsidies. C. To mandate that all Arkansas residents purchase health insurance. D. To offer employer-sponsored health insurance plans to Arkansas businesses. Answer B. Explanation. The Arkansas Health Insurance Marketplace is designed to provide a platform where individuals can purchase health insurance, compare plans, and determine their eligibility for government subsidies based on income. This is part of the Affordable Care Act's goal to make health insurance more accessible. Therefore, option B is correct. Question 25. Which of the following is true regarding the cancellation of a health insurance policy for non-payment of premiums in Arkansas? A. The insurer must give a 10-day notice before cancelling the policy. B. The insurer is not required to provide notice before cancelling for non-payment. C. The insurer must give a 30-day notice before cancelling the policy. D. The insurer must give a 60-day notice before cancelling the policy. Answer C. Explanation. In Arkansas, an insurer must provide at least a 30-day notice before cancelling a health insurance policy for non-payment of premiums. This gives the insured an opportunity to make the payment or rectify the situation before the policy is cancelled. Therefore, option C is correct. Question 26. Mr. Harris has a health insurance policy in Arkansas. He has a choice of doctors within a specific network. If he visits a doctor outside the network, which of the following is true? A. The insurer will cover the visit in full. B. The insurer will cover the visit, but at a low reimbursement rate. C. The insurer will not cover the visit at all. D. The insurer will cover the visit only if it's an emergency. Answer B. Explanation. For policies with a network of doctors, if the insured visits a provider outside of the network, the insurer will typically cover the visit, but at a low reimbursement rate compared to in-network providers. Therefore, option B is correct. Question 27. In Arkansas, how many days does a policyholder have to request a second opinion for a medically necessary procedure before being required to proceed with the treatment? A. 30 days. B. 45 days. C. 60 days. D. 90 days. Answer A. Explanation. In Arkansas, a policyholder generally has 30 days to request a second opinion for a medically necessary procedure before being required to proceed with the treatment. This is to ensure the insured is making an informed decision about their health care. Therefore, option A is correct. Question 20. Under Arkansas law, which of the following conditions is typically excluded from coverage under a basic health insurance policy? A. Emergency surgery. B. Pregnancy-related expenses. C. Mental health treatment. D. Cosmetic surgery. Answer D. Explanation. Basic health insurance policies often exclude coverage for cosmetic surgery unless it is deemed medically necessary. Emergency surgeries, pregnancy-related expenses, and mental health treatments are generally covered under standard health insurance policies in Arkansas, though there may be specific limitations. Therefore, option D is correct. Question 29. Which of the following best describes coinsurance in a health insurance policy? A. A fixed amount the insured pays per visit to the doctor. B. A percentage of the healthcare cost that the insured must pay after meeting the deductible. C. The total amount the insurer pays for a claim. D. The annual limit on how much the insured must pay for healthcare services. Answer B. Explanation. Coinsurance refers to the percentage of the healthcare costs that the insured must pay after meeting the deductible. For example, if the policy includes a 20% coinsurance, the insured will pay 20% of the costs and the insurer will pay the remaining 80%. Therefore, option B is correct. Question 30. Which of the following is required for a policyholder to receive coverage for prescription drugs in an Arkansas health insurance plan? A. The drugs must be approved by the U.S. Food and Drug Administration (FDA). B. The drugs must be prescribed by an out-of-state doctor. C. The insured must pay the full cost upfront. D. The insured must submit a claim for reimbursement. Answer A. Explanation. For prescription drugs to be covered under an Arkansas health insurance plan, the drugs must generally be approved by the U.S. Food and Drug Administration (FDA). This ensures that the medications are safe and effective for use. Therefore, option is correct.